Your media, where you are.
Hello, it's Boitumelo Monare, a private banker who is super excited to be in conversation with Palesa today on debt and managing personal finances.
Dumelang, molweni. Hello, everyone. Today, I'm equally excited to talk to Boitumelo about personal finance as well as debt. Boitumelo will also expand a bit more about what she does. She mentioned earlier that she's a private banker. I can't wait to hear more about that. Boitumelo, welcome.
Thank you, Palesa.
So, Boitumelo, what does a private banker do? I think that's what I'm more excited about than the actual topic.
Yeah. Okay. Thank you so much for having me on the show today. As I mentioned earlier, very, very excited. So what a private banker does, I assist my clients with managing their portfolios, and that ranges from debt to growing their respective investment portfolios, or just whatever personal finance thing that you would even ordinarily walk into a bank to do. So for my clients, I make it easy because I'm a phone call away, I'm an email away, a WhatsApp away, and whatever the client wants to find out, I'm available to assist the client.
Oh, okay. Well, that's interesting. All right. So what I would like to do though is just to expand a bit more about who you are, and then we'll go back into what does a private banker do, right? So I was excited to actually invite Boitumelo to come and have a conversation with me because I just read a brief about who she is. Boitumelo is a multifaceted and vibrant young African who is passionate about helping others become the highest versions of themselves. She's already mentioned that in her private banking career, she helps clients to make better financial decisions. So, a banker by profession with 8 years experience in the industry spanning from product management to her current role, which is private banking. And she assists clients in growing their portfolios. That's an interesting term because we talk about portfolio this and portfolio that, but I don't know if everyone understands what portfolio is, especially in the context of finance. So maybe you'll also expand a bit about what you're talking about when you're saying a financial portfolio to a person. So, Boitumelo, tell us a bit more about what you've already mentioned what you do on a daily basis. But now, let's say Palesa is sitting in front of you. And when you're saying, Palesa, let's look at your portfolio, what is it exactly that we are unpacking?
So Palesa, with this part of the conversation, I think it's so important to differentiate between and making it as simple as looking at a portfolio as your assets and your liabilities. So when we look at your assets, we're talking about things like your vehicle financing, property finance, or any investment that you've decided to get into. So those are your assets, because at the end of the day, your assets help you either generate more income, or it's something that you have then acquired to enable you to later on maybe be able to dispose of it and be able to make money of it. But it's there in essence to facilitate the things that you do on a day-to-day basis. So for example, your vehicle, that's something that you'd be using from getting from one point to the next. And when we look at the other side, just at a very high level, liabilities, so that consists of all debt in terms of, you've got unsecured lending, so your credit cards, your revolving credit loans. So those would be liabilities where you get money from the bank, and that money you will then use it to pay for whatever it is that you're looking for.
Okay.
So it's very important to me as a private banker to walk the journey with my clients to ensure that as they're growing this portfolio, they are managing these assets versus liabilities, because you never want to be in a position where your liabilities exceed your assets unless they are generating an income for you and you've got that long-term view.
Okay.
So one has to sort of be smart about it if it is going to be the case that your liabilities are more.
Okay. So does that mean then clients get to be honest with you and just tell you everything, especially the koloto tabon?
That is extremely important.
And if they don't, what do? Do you have a way of getting that information either out of them still, or maybe from a credit bureau or something like that? Is there a way?
So that's critically important. And I always mention to my clients, especially when we're building a relationship, that it's so important that we have a very open and frank conversation, Because in my role as a private banker, I'm there to assist and facilitate, as I said, in managing this portfolio. So I always say it's important in our very early conversations for me to get sight of that. But sometimes I do understand it's a bit uncomfortable for people. But that is why even for us as a bank, it's important there are certain documents that we'll request from you. So your pay slip is going to tell me how much you're earning, for example. Your bank statement is going to inform how you're managing your money, because I'll be able to see the transactions that are running off there. And as well as the credit checks, as you've said, we do credit checks depending on what it is that we're doing. So if we're financing something, we will do a credit check. So those things, even if a client is not explicitly stating them in conversation, the client does have to give me authorization to be able to go and conduct some of those checks. So you do get a holistic view of the client's financial background and management of finances.
Okay, all right, that makes sense. So how does one then have access to a private banker? Can I just ask for a private banker?
Yeah, good question.
Yeah, regardless of how much I earn.
Very good question. So with the different banks within the country, the different banks would have different requirements in order for you to be able to get onto the private banking product suite. So with some banks, you would have to earn a certain amount, also depending on the type of product that you have. And in other spaces, like I look after young professionals particularly. So with the bank that I work for, we already bank them in their final year of university. And the reason that we do that is because in a country like South Africa, where there's a lot of debt in our country, for us, it's important in that final year to make sure that we are even equipping them with the financial education so that in the following year, when they do start working, they're already empowered and they don't get into the world of work and get so excited, because you can imagine you haven't been earning any money and suddenly, for example, as a medical doctor, you're earning this big amount from nothing. So it can excite you so much that you don't know how to manage your finances. So with my institution, for professional banking clients particularly, we get them in their final year.
So they haven't even started earning anything at that point, I suppose.
Absolutely.
Yeah.
Absolutely.
Okay. No, that's interesting. That's interesting. Okay. So, Dumi, I want, and you kept touching on this topic, I want us to get into the conversation about debt. We call it credit, we call it debt, we call it dikolodo. Doesn't matter which language you use, but we have to touch on it. And the reason why I want us to touch on it is because before you can even start saving and investing, and in my previous show, we spoke about budgeting, and we spoke about how it's important to save and things like that. But how are you going to save if you don't have cash flow? If there isn't money that is sitting there waiting for you to actually save or invest, how are you going to do that? If you need to buy a property, if you need to buy a car, whatever the case may be, you need to have access to funds. So the reason why I really want us to focus on this today is because I feel it is the route that will take us if we understand it, and if we know exactly where we are and what are the things that we need to do to make sure that we manage it, then we should be able to do other things. We unlock opportunities if we are clear on how to use good debts and how to avoid bad debts, right? Okay, so you mentioned assets and liabilities, so that means you are very clear in the statements that you analyze of clients. You are very clear on whether the client is heavily indebted, heavily indebted or not, or whatever the case may be. So in your context, what is your understanding of debts, and how do you advise your clients in terms of debt management?
Okay. Very good question. And I think in a country like ours, as I've stated, we live in a society where there's still so much that we're recovering from as a country, catching up from things of the past where we came from disadvantaged backgrounds. So it's so important that we continuously educate our clients and walk the journey with them, because no two clients are the same. So what that means is that I'll have one client, they may be doing the exact same job, but their obligations are different. And we need to always be clear and understand that. So, and that's why it's important to sit down with the client to understand, where are you at? Where are you trying to go? Speaking of debt, bad debt and good debt, I think often debt is sold as this very horrible thing. And not necessarily, because debt can be used to acquire assets, as I've stated, and also to alleviate pressure in some instances. So when it comes to unsecured lending, particularly, that's where you're looking at your credit card, your personal loans. I always mention to my clients that those are not necessarily bad, but one needs to understand what the implications of getting yourself into unsecured lending is.
But don't even go too far.
Yeah.
How do we get this term unsecured? Why is it called unsecured? And you mentioned credit, and you mentioned credit. Kind of, what was the other one that you mentioned?
A revolving credit
loans. So why is it called unsecured?
So unsecured lending is where the bank or any financial institution would give you funds that are not backed by any asset. So when I say it's not backed by any asset, it's money that you come to the bank and you knock on our door to say, I need a credit card, I need a revolving loan. And at the end of the day, we as a bank, we can give you that money, but we can never, if you default, for example, there's no way for us to maybe take an asset away from you and sell that asset to be able to recover our money. Okay. So it's not secured by anything. And that's why you'll even find that the interest that you pay on a loan, a credit card, tends to be higher than what you would be paying on if you finance a property or a vehicle, for example. Because when you finance those assets, that's called secured lending. And with secured lending, we are then able to, as a financial institution, say, okay, we've given you funds for this particular asset, and if you then do default, we can take it back from you and then be able to recover our money through disposing of it. Yeah,
of the asset.
Yes.
And I guess that's why a car finance would be sort of sitting in the middle, because they may sell it, but because it depreciates, it's not going to be at the same value that they have given you the loan for, right? Okay. All right. 100%. Okay. Making sense.
Yeah.
I'm not a banker, but it's starting to make sense.
Yes.
Right? Okay. So anything else to me that you want to just advise us on in terms of this, because you're still expanding on the bad debts and the good debts and how you manage them?
Yeah. So, with unsecured lending, as I've just touched on now, is that the interest rate that you tend to pay on any unsecured financing, whether it's a credit card or whatever, the interest rate will definitely be higher. So those are some of the things that one needs to take into consideration. So think clearly and carefully about why you need the funds, because often you'll get a message on your phone from whatever financial institution that's offering you whatever personal loan and saying you could qualify for this, for X amount, so contact us to find out. My advice with that, I always say to people, just because you've got access to something doesn't mean you should take it up, because that's how we find ourselves heavily indebted. So be very clear. I mean, if you're taking a loan, for example, to just splurge, go shopping, go on holiday, that's not the best financial decision to make, because for a year to come, you're still paying back this debt, and the interest that you're paying it, in essence, this money that you've utilized for this thing, you end up paying almost times 2 or whatever the factor is for whatever it is that you finance. So I only really recommend that you get into unsecured lending when it's absolutely necessary. It happens. You come from backgrounds where sometimes there are siblings that are still in school. You've got to help at home. There's a need. Your younger sibling has to go back to university and there are no funds and you need that money now. That is a worthy cause. But even with that, whatever the need may be, it's important to have a structured approach to it where you have a goal and saying, I'm taking this unsecured loan right now, but my plan is to cover it in the next year, 2 years, 3 years, and stick to it. Because often the discipline is what we lack to be able to see it through. So if you look at something like a revolving credit loan, that is a facility that you can have indefinitely and you keep revolving as you pay back, because there's normally a requirement that you pay. If let's say as a bank we've given you 100,000, there's a requirement that you pay 15% of that 100,000 before you can access money in this revolving credit loan. So if you take the entire 100,000, you go and splurge on whatever, you don't have access to it, you're paying it off. But as soon as you've paid a minimum of 15%, then you can start revolving a certain amount. And that's how sometimes you find yourself in a cycle of debt.
Yeah.
So it's important to just, whatever unsecured loan you get into, whether it's a credit card or whatever, have a plan and stick to it. Yeah.
I often say that what I would say, when you have debt or when you're thinking of accessing debt, it must at least be for investment purposes. So in other words, you are borrowing the money to actually generate money with it. And that way you're able to pay back the money, but at the same time you remain with the asset that you bought with that credit. And hopefully that asset is able to generate some sort of
money.
income for you, or capital or something like that for you. So that's a good one. Now let's talk about optimization, debt optimization. Our clients would come to us sometimes saying, Palesa, should I buy in fact, I would like to buy a house, right? Or I would like to buy a car, or I would like to invest, or I would like to take up a life cover, but I really am stuck. I can't move. I'm stuck. I mean, I'm using more money than I actually receive. So how do you help me? And of course, then the concept of optimizing the current debts that you have to allow yourself to have a bit of cash flow in order to do the other things that you want to do come into the equation. So how do you approach it as a private banker?
You know, one important element to consider is the interest rate of whatever it is that you're considering getting into. So whether it's an investment, whether it's debt, that's important, because if you look, let's say you've got a multiple plethora of debt, right? So you may have a credit card, you've got a personal loan, and you want to save as well, but at the end of the month, you don't have enough money. It's important that you try and kill your debt or reduce your debt, especially the debt with the higher interests. Especially that, because I mean, if you're paying a loan that's got 27% and you're paying a credit card of 16%, the cost of the credit card is less than that of the loan. So it's always ideal to get rid of the personal loan first, with the view of obviously freeing up money to be able to then do other things.
Okay.
So that's the conversation I normally have with my clients, to say, I understand you want to start saving money, you want to start investing, and as you've correctly stated, that sometimes it does make sense to take your whatever credit facility you've got access to invest. Also with that, make sure that you know all the numbers, what it looks like, because at the end of the day, if you're paying this exorbitant interest on the loan and whatever investment or saving you're putting the money into is far less, then it kind of doesn't make sense when you try and translate it into rands and cents. But that's where then it becomes important to speak to people who have the knowledge. So like your private banker, your financial planner, to be able to make sure that you're comparing apples to apples.
Yeah. No, 100%. And I think what also helps in this regard is, if you mentioned the good debts earlier, and if you want to try and avoid the bad debts as much as you can, is maybe to, we would generally say, have a bit of saving at least. So which products would you say, or which maybe benefits, I don't know, one should have in order to avoid taking the bad debts?
So, I mean, if I start just by saying with the good debts, I'm calling them good debts in inverted commas. So where you're looking at financing a property, for example, that is something that over a period of time, I mean, it does appreciate in value, and it can generate an income for you. So those I would regard as good debts, because they are secured. It is secured by some type of asset. So even with that, in planning towards that, and this is the conversation I often have with clients, to say, as a bank, you come to us knocking on our door and you want to finance that, we're more than happy to do it. The important thing is to also plan ahead for that, because there are different things that influence the kind of rate that you'll even get from the bank when you're looking at something like that, as defined as good debt. So whether or not, if you are putting down a deposit, that also helps you get a better rate. It's not a requirement for you to put down a deposit, especially with your first property, but it is something that the bank likes to see, because you are putting your skin in the game almost and saying, look, guys, I've done my part, so can you help me with the rest? And then the bank is like, okay, you know what, you've done well, so let's give you this loan at this particular rate.
Okay.
So it's important to then think holistically of your portfolio, to say, well, if I'm going to buy a big vehicle right now, you know, I'm earning maybe 1.5 million and I want a car for 1.2 million, because I think, you know what, I've worked so hard. Let me get this car. And I always say to young people particularly that, you know, you've worked so hard, you've studied, and now you finally qualified, and you feel like you need to reward yourself because you've done well. And yes, it's true, you've done well. But also, I remind them to have a very sober conversation with self to say, it's not just in the now. We must think holistically. So in the next 5 years, where do I want to be? Do I then want to have a property because I could potentially have my family? But then I've bought this big car that has a big installment. And now when I come for property financing, I'm overexposed just in terms of debt, because the bank also looks at that to see on a monthly basis, will you be able to meet your financial obligations?
Yeah.
So I try and paint that picture to my clients to say, don't just think about the now, think holistically about where you're trying to go in the medium to long term, so that we can plan accordingly. And sometimes that means starting with a smaller car, even though you're earning whatever amount, starting with a smaller car, building yourself up to a point then you know that in the next 2 years you're able to get the property that you actually want, and you won't be restricted by the bank.
So planning, consulting a professional, very important, and of course stick to your goals.
Yes. It doesn't mean, you can't spoil yourself. It doesn't mean that, it would be so horrible to wake up every day and you can't have that thing that you've always wanted. But I think if you also plan for that, to say, okay, with the different products that we have, so you've got savings products that are also where you've got instant access to your money, or you could have more of a fixed deposit account. But by then being intentional and clearly planning around that and saying, you know what, in a year's time or in December, I want to go on holiday. How do I make that possible? It's not going to fall from the sky. How do I make it possible? I want to spoil myself because I work so hard during the year. Then you put some money in whatever savings products, and that savings product is not necessarily to try and generate, the returns that you would get from an investment, but it's just to say, I'm putting money aside for that particular goal to make it a reality.
So to me, I mentioned earlier that you are a multifaceted, vibrant woman, right? You've painted a beautiful picture for us. We now have a clearer understanding of how to manage our debts. Even though then I would still like to expand on the topic next time with maybe you again, or someone else, because I just feel like there's a lot to talk about when it comes to debt, and we will never be able to cover in one day. Time is not something that we always have on our side. So when we talk again, we can expand a bit more.
For sure.
As a multifaceted young woman, how do people get a hold of you, and what else do you do with your time? I understand that you have a show. Tell us a bit more about that.
Thank you, Palesa, and it would be an absolute pleasure for me to carry on the conversation. As you said, it is quite a big topic around debt. So if you do happen to invite me again, I'd be more than keen to do it. But as a multifaceted young woman, so I never limit myself. I see no ceilings. And I believe my purpose in life is to assist others as well to see the greatness that is within them. So I believe we're all born as kings and queens. There's a light that shines in all of us. And that's why I started, one of the things that I started a platform called The Royal Corner. So on YouTube as well as Instagram, where I have conversations with other people who have risen to their light in order to be able to inspire others to do the same. And it's just really having conversations to say, Palesa, as you're sitting here, who are you? What do you do? How did you get here? So that, through telling those stories, I've picked up that by sharing that, because people often think it's a magical thing that just comes from the sky, but by taking a step and saying, I'm tapping into my light, the journey just unravels itself. So I found that these conversations, the more we have them, we allow others to shine their light. So currently on YouTube, where I've had a couple of interviews. I haven't done any in the last year, but I've loaded the ones that I've done historically. I'll get back into it. I just took a little bit of a break, but very good conversations with various people. So do check it out. It's called The Royal Corner on YouTube. And on Instagram, I am The Royal Corner _SA.
Okay, and anyone interesting that you're speaking to in the show?
So I've spoken to, like I've said, I've taken a break now just because I need to finish with my studies. But historically, I've spoken to the guys from the Dojo podcasts. They have their own podcast. So it was 3 gents that I was speaking to. Very interesting conversations on different topics. I've spoken to CD Kuno, who's an HR practitioner, and just being able to speak to someone who, because a lot of young people in our country are looking for jobs and they don't always know how to approach some of those conversations. I've spoken to psychiatrists, professionals who are doing well in their respective spaces. So it's quite a diverse show with different types of conversations.
So The Royal Corner.
Yes.
All right. And as a private banker, where do we get a hold of you, or how do we get a hold of you?
Okay. So I wasn't ready for that part. I was not ready because I'm just thinking I don't want to give my Standard Bank email address.
Okay, don't give your Standard Bank email address, but just say
My number.
something. Yeah.
Okay, let me
No,
find.
not your number.
How will you get a hold of me otherwise?
Not your number.
Not my personal number, my business line.
Oh, your business line,
Yes.
yes, please. Your business line you can share. Don't not your.
Okay,
your
let me
personal
find it. I
number.
don't even know it's this number. Boitumelo Monare. Okay. So I'm just gonna continue there. Right. So as a private banker, I can be reached on my business line. I'm available Monday to Friday during business hours, and I'm more than happy to take WhatsApp messages and even an SMS, or even for someone to call me and ask me to call them back.
Okay.
More than happy to do that. So that number is 073 013 8701.
Okay.
Sure.
All right. Oh, that's fantastic. And you mentioned that your clients are mainly professionals. That's the
Yes.
space you are in. So if we've got attorneys, doctors, lawyers, teachers,
All of.
nurses, they
Yeah.
can call you.
Yeah,
Okay.
they can reach out, and I'm
Perfect,
more
they
than
can
happy
reach
to, if I need to refer them to somebody else in the business,
Okay,
more than happy to do that.
That's perfect. To me, you have just shined a light on my life.
Oh,
Thank you very much.
it's a pleasure, and thank you for having
It was really
me.
a pleasure having a conversation with you. And till we chat again.